and welcome to Blocks Live TV. Today is Wednesday, July the 3rd. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City and 2:30 p.m. in London, 10:30 p.m. in Tokyo and 3:30 p.m. here in Malta. We have Jason Fernandez and Jose Maria Macedo joining us on the market show today. But first, let's see where some of the indicators stand. Well, starting off, the cryptocurrency index CCI 30 rebounded by approximately 500 points towards the 4,800 point territory. The index, as we can see here, stands 2% in the green so far in July, and it's up a massive 120% year to date. The 30-day Bitcoin Volatility Index has stayed above the 5% mark since Sunday. This comes as the price has been swinging in both directions by double digits. The CoinMarketCap website's 24-hour traded volume indicator has declined towards the $90 billion level. The Messari website's real 10 volume measures at just slightly more than $5.4 billion. Talking Bitcoin dominance indicator now, it has increased by approximately 2% as the price of the top cryptocurrency surged by double digits. While the top 5 digital assets are all trading in the green, Bitcoin leads in terms of gains as it surged back above the $11,000 price level. Ether has been climbing up and it's currently facing resistance around the $300 mark. XRP trades close to the 40-cent zone on an increase of 1.5%. Litecoin is up by 3% to break through the $120 level. And lastly, Bitcoin Cash has returned back above the $400 mark. Taking a look at the Coin 360 heat map now, it shows a generally green picture as most of the cryptocurrencies have rebounded following the recent decline that we did see. Well, according to the Token Spread website, the Bitcoin dollar pair has the biggest arbitrage of 1.4% between XMO and Kraken exchanges. The biggest buy and sell side difference is on the XMO exchange and it's 0.36%. Well, we continue looking at the characteristics of various crypto projects, and today it's time for a look at Casino Coin. It was created with the online casino industry in mind. Its features and tools have been created to meet the needs of users, operators, and regulators. While users benefit from speed, security, and control over their funds, operators also gain access to a large source of players, and regulators obtain complete visibility into the source of funds. The virtual coin's price peaked at close to 3.5 cents in early 2018, and as of today, it can be purchased for less than 0.1 cent. Well, we'll now review the performance of the various cryptocurrency asset classes as grouped down by the Messari website. Starting off with the infrastructure group, which shows an increase of nearly 2%. EOS is the only asset that's trading in the red. The media and entertainment category posts a fractional decline here, but there is plenty of red on the table. The financial sector is the most bullish asset class with a gain of just under 2.3%. Bytum is one of the top gainers and it's up by nearly 10%. The currency category has increased by more than 2% as Bitcoin rebounded sharply. Well, lastly, the services section stands just under 1.7% in the green. The Mative coin and Dent token are the most significant bullish drivers here. Well, that's where the 5 major cryptocurrency categories stand so far on this Wednesday. Let's now take a quick look at some of the most significant moves among the top 100 digital currencies. Then we'll be back with our crypto experts after a very short break.
different countries all around the world, which makes us growing like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
Well, we are now back with our crypto experts, Jason Fernandez, COO and co-founder of AE Token, and Jose Maria Macedo, Head of Advisory at Amazix. So Jason, Jose, thank you so much for joining me on the line today.
Thanks, Jessica, for having us.
Great to have you both. Now, Jason, I'm going to start with you here because what we have seen right now, volatile, is probably the best word to describe the most recent crypto market moves that we have seen. Bitcoin dropped below the $10,000 level just to rebound with a double-digit surge. What is your take on these most recent moves?
So that, to me, was rather expected. I had a feeling it wouldn't drop much below 10,000. So yesterday when I was asked if I thought Bitcoin was a buying opportunity at 9,000, I said it was a buying opportunity right then at 10,000, even though it was going up and down between 10,000 and just under it, and then just over it. So I really expected it to rebound, and I think now that we're past that and it's picked up some support at 10K, I think the path to 14,000 and beyond would be much quicker now. And it's essentially set a lower boundary that is around 10K, maybe just slightly underneath it, maybe a little bit over it. But it's sort of set a floor, so to speak, and the ceiling, I think, would probably be the all-time high, at least for right now, would be the next thing to look at. But I think that retracing to 14,000 shouldn't be really far off.
$14,000 and beyond. So Jose, what's your thoughts on the most recent moves that we have seen?
I think the first thing to remember is that Bitcoin is a fixed price commodity and a fixed supply commodity, which means that volatility is totally natural because any increase or decrease in demand can only affect the price, will cause large price shocks. And so what we're seeing is the price simply oscillating around Bitcoin's fundamental value, which to me is increasing every day as it continues to work as advertised as a global censorship-resistant settlement system with a fixed monetary policy, i.e. the digital gold narrative. And I think this is getting consistently more appealing to people given the macro themes that we see playing out in the global market. So we now have obviously trade wars with China. It's no longer seeming like China will seamlessly join the international economic order, as the term might have been understood. There might be an ongoing Cold War. And, with the capital control and capital flight rules in China, Bitcoin will continue to prove an attractive way to get capital out of the country. So and the same thing we're seeing with Iran and the trade wars. So obviously, the U.S. has put sanctions on Iran, and what we're seeing is that demand for Bitcoin in the country has increased as they've sought to cut off because of the U.S. sanctions. So we've seen stories of people mining Bitcoin in mosques on account of the subsidies the government are providing to religious centers. We've seen reports of this affecting the power grid, with Iranian Energy Ministry spokesman saying that digital currency mining was actually making the power grid unstable. They've seized 1,000 Bitcoin mining machines. So again, this is another example where global instability is increasing demand for Bitcoin. And then finally, even within the U.S., we're seeing sort of the U.S. Democratic Party become more and more left-wing. So as America's fiscal deficit grows, there will be a long-term need to restore fiscal sanity. And what we're seeing is presidential candidate Elizabeth Warren, for instance, advocating a wealth tax. And this, again, is going to drive demand for Bitcoin as a way to avoid this and to be sort of resistant to these taxes. And one thing I think we can all agree on is that this recent price rally has not been retail driven. I mean, Google Trends data shows that the search volume for Bitcoin has not spiked in the same way that it spiked in 2017. We can also see this on follower trends for exchanges, that the followers haven't increased as they did in 2017. So I think this lends credence to the idea that this is being driven by institutional investors trading OTC and by China, because what we're seeing is search volumes increasing quite dramatically in China, especially among older investors, which is different from what it is in the West, which probably lends credence to the idea that these are older people with some capital to their name looking to evade these capital flight rules. So yeah, I think it's really important to keep in mind this longer term story when we're thinking about Bitcoin's volatility.
And Jason there mentioned kind of a short-term bullish outlook. What you've mentioned, the kind of the global economic issues, Jose, they're quite long-term issues. So you're long-term bullish as well?
Absolutely. I mean, I think the short term is very hard to predict, especially in a market that's as manipulatable as sort of the crypto market is. But I do think long term, this is a multiple trillions of dollar market cap asset class, and I'm fully confident on that.
And now I want to move on, and I want to ask you about some recent news we have heard about Jeff Dorman, who's a chief investment officer at Arca. So he's recently reported that actually that it's almost a slam dunk now that the Bitcoin ETF will not be approved anytime soon. So Jason, I want to start with you here. This due to the most recent rally, most of which occurred after US trading hours. Do you agree with his view that he stated?
So yes and no. And no, I mean, I do agree that the volatility is not looked upon favorably by the SEC. It's worth noting, though, that the SEC has already declined several Bitcoin ETF proposals due to the concerns raised about like high market volatility and sort of the risk of market manipulation. But also, if you actually look at what happened recently, this, as corrections go as far as Bitcoin is concerned, a 30.5% correction is somewhat mild compared to some of the other corrections that we've had historically. So most of the range anywhere from like 31.5 all the way up to 41.3% as a correction, which is obviously massive. So it's actually milder than all but 3 of the corrections that have ever happened in Bitcoin, historically speaking. We also know that in May, Hester Pierce said that the time was ripe for ETF, and she actually said that she felt that the time was ripe about a year ago. So by that yardstick, we're actually late on an ETF. So I think that there are still 3 funds pending approval that are in the pipeline. And I think that once BACT is approved, ETF approvals are imminent. So I don't think that this means, we can kiss Bitcoin ETFs goodbye. I think that's coming one way or the other. It's coming down the pipe.
And Jose, what's your thoughts here? We've got Jeff Dorman, his views on Bitcoin ETF and the recent rally. How did you interpret the news?
Yeah, I would agree with most of what was said already. I think that I think it's unlikely that the SEC is ready to approve a Bitcoin ETF in the first place. So far, they've obviously seemed more than happy to keep kicking the can down the road in perpetuity. We've been discussing the possibility of an ETF since at least March 2017, and despite the odd positive comment from Hester Pierce and others, we don't really seem to be much further at this stage. I think this is just a feature of the SEC as well. They like to take their time. At Amazix, we're very focused on security token offerings and security tokens, as a good number of our clients are using this mechanism to raise funds. And one of the things we've discovered is that although a number of American startups have filed with the SEC to conduct, for instance, Reg A Plus offerings, which is an exemption under the Jobs Act, none of these have actually been approved, and that's a year after filing in some cases. Now, I totally understand the SEC and Jeff Dorman's position, and I think the sort of manipulation that we've seen in the markets recently is a reason not to have the ETF. But yeah, I think we'll just have to see how it develops.
Okay, and it does sound like it's quite an interesting time. And Jose, I want to start with you for the next one, because what we have seen here is that we've seen for the first time that the UK Financial Conduct Authority has authorised and dictated a crypto asset manager firm as an alternative investment fund manager. Is this an important move for the step? What we have seen is Prime Factor Capital, which is a crypto asset management firm headquartered in London, has been offered this license to operate as a full scope. Is this an important move for the crypto space, or was this more a kind of a PR stunt? How did you view?
I think this is definitely an important move. You know, the AIFM directive is a directive applied to private equity funds, hedge funds, and real estate funds, and it sets standards for marketing in regards to raising private capital, for risk monitoring, for reporting, for loads of other stuff. And this will also allow sort of firms to raise more than 100 million euros in assets and target institutional investors. And it could represent a significant milestone, not just for PFC, but also for the industry as a whole. So I would say this is more a PR stunt for more than a PR stunt for two reasons. I think this is the first time a crypto asset management firm is going to have to comply with the same rules as traditional investment managers on transparency, disclosure, reporting requirements, and all this stuff. And this is something that will bring a lot of confidence to the market and potential investors, particularly institutional investors that are used to having these types of procedures taken for granted when they're investing in a hedge fund or private equity. And then the second thing is that being FCA regulated brings the PFC and other potential asset managers under the purview of one of the most recognized regulators globally. I think this recognition is particularly relevant in the cryptocurrency space, which has repeatedly captured headlines for poor operating standards and fraudulent activity. And this type of validation is kind of vital, I think, to the long-term success of the crypto industry. The people behind this fund are also very impressive. They have experience at BlackRock and others. So I think the entry of these extremely qualified people into the space and also getting the confirmation from regulatory agencies like the FCA is a huge positive for the space.
And Jason, what's your thoughts? Jose's referred to this as as a significant milestone. Do you agree?
Yeah, I think so. I mean, I think it's a really important step. I'm not sure it says very much specifically about the outlook for this particular fund one way or the other, because it obviously depends on where they're investing and what they're buying. But overall, it does indicate a greater acceptance of crypto. So this is apparently approved by a UK watchdog, but the firm is going to abide by European regulations. And they'll also have to appoint essentially an independent custodian that's under EU regulations to sort of ensure and validate investors' returns and also the fund's holdings. So it's all very, on the up and up. Apparently, they also, as Jose pointed out, they're able to hold more than 100 million euros in assets, which is quite a significant amount. And they are sort of the first agency to be approved to invest sort of exclusively in cryptocurrency as an asset class. And I think for most vehicles of sort of trading cryptocurrency that people actually use are generally outside the purview of regulators. And so that scares a lot of investors, and that sort of makes it a much more risky proposition to get into. However, this being sort of fully regulated is a huge step. And I think one of the interesting points is that they're also targeting institutional and professional investors. So that indicates also that this could be a huge step, because it's not just retail investors. These are professionals that are going to be able to put in some of their funds.
Okay, and now if we move on, because Jason, I also want to ask you about a Bloomberg report that we heard from Chainalysis. It looked at activity on the Darknet. As we know, in the build-up to cryptocurrencies and the popularity of cryptocurrencies, Darknet was a really prominent passageway. Markets now are saying that actually during the first half of this year-to-date spending amounted to $515 million worth of Bitcoin. This was down from 2012 by about, it was 7% rather in 2012. How do you assess the dynamics of this spend that we are seeing? Still is something that we are seeing circulating on the Darknet. How would you assess this?
So it sounds to me like there are a lot of Bitcoin holders, right? We know, for example, more than 60% of Bitcoin hasn't moved in a year. Like, that's despite the massive price rise in Bitcoin. But basically, we haven't seen any movement for something like 60% of the total number of Bitcoin. So while they were talking about a percentage of Bitcoin activity, this may add up to less than 1%. In real numbers, like they pointed out, it's something like the highest numbers ever seen, something like 515 million so far, and they expect to cross $1 billion. So while as a percentage of the total worth of Bitcoin, it might be a small amount, it still means a huge amount is being spent. And it also means, for example, that there are a lot of different use cases for Bitcoin that don't involve spending it necessarily on the dark web. People for a long time, whenever people mentioned Bitcoin and cryptocurrencies, people used to conjure up images of the dark web and all this shady activity going on. And in fact, we see that it's making up a smaller and smaller percentage of the total amount of Bitcoin in circulation, which indicates that there are a whole lot of really interesting use cases in Bitcoin, and there are new ones coming up every day. So a lot of people may have invested their Bitcoin. Some of them now you can actually get interest on Bitcoin in certain exchanges and in certain services. So some people have done that, and some people are also just using their Bitcoin to trade. So as far as this use case as just being a currency for the dark web, that has long since been busted, and these statistics basically say that. So it's sort of positive, I think, for Bitcoin that even though the money has the total absolute number has increased, as a percentage of the total Bitcoin in circulation, and the number has actually decreased.
Okay, so you view this fairly as positive. Jose, what's your thoughts on this? Are you in agreement with Jason, or is there anything you'd like to add?
Yeah, I agree. I think the figure that media outlets such as Bloomberg sort of latched onto of $500 million is largely meaningless. It just sounds cool. You know, the only reason why that figure is so large in dollar terms is because of the increased amount of Bitcoin activity within the entire economy. Illegal usage of Bitcoin still accounts for less than 1% of all activity, you know, which Chainalysis themselves have confirmed, making Bitcoin proportionally used far less by criminals than the US dollar, which remains the black currencies market currency of choice, you know. And I think this is because Bitcoin is just not that good a currency to commit crimes in. You know, it literally leaves an immutable record behind it. Unlike what most media outlets will tell you, Bitcoin is not anonymous, it's pseudonymous, and actually leaves a perfect trail leading back to every single transaction that was ever done with it. And whenever this Bitcoin touches an exchange, it's very easy to catch the criminals. I mean, there's been studies showing that even using the sort of the mixer services that are out there, it's still not a good method to launder your Bitcoin, and it can still be traced back fairly accurately by firms like Chainalysis. Of course, in 2012, we still had Silk Road. It was one of the few compelling use cases for cryptocurrencies at the time, and so it was expected that 7% of all Bitcoin activity would come from that. But the industry has since far transcended that, and today, while darknet markets retain a strong appeal for a subset of cryptocurrency users, that's just a footnote in Bitcoin's history, having been dwarfed by the billions of dollars in on-chain activity that Jason referred to, you know, from exchanges, futures, decentralized finance, etc. I think if darknet markets see $500 million of trade this year, that's just evidence of the crypto economy led by Bitcoin being in robust health.
And when we look at the use, that it is Bitcoin that is the most popular cryptocurrency that has been circulating on these marketplaces, as opposed to more privacy coins like Monero, is that something that's a surprise to you, Jose, or is that something that you are expecting just because people may have accumulated Bitcoin from a few years prior?
Yeah. As the dominant cryptocurrency held by the majority of cryptocurrency users and available on sort of the most exchanges and wallets, it's not too surprising that it sees the most users on the darknet, although this is kind of surprising because of its evident privacy flaws, you know, and the ease with which firms like Chainalysis can track darknet Bitcoin usage. I think it'll take probably a major event, such as the shutdown of more Bitcoin-based darknet markets and prosecution of buyers and sellers using on-chain evidence to snare them, before people can change their behaviors and start using more privacy-centric coins. That said, most darknet markets now also accept Monero, including the most popular one at present, which is Empire. And you can also use it on Berlusconi, Kryptonia, Nightmare, all the different sort of darknet markets. So there's plenty of people who savor their privacy and want to be able to use darknet markets anonymously without fear of their transactions coming back to haunt them. And right now, actually, 80% of all darknet markets accept some kind of privacy coin. So people who are making small purchases, probably the reason they have nothing to fear, so are content to use Bitcoin. But I think for everything else in the darknet, we're going to see a continuous move towards the privacy-based coins.
Okay, interesting. And now finally, Jason, I'd like to end with you and talk about the CEO of Kraken Exchange. So Jesse Powell has recently spoke out in an interview pointing out that actually in his exchange, he sees huge increases in fiat, which correlates with the increased supply of Tether. Of course, there are plenty of controversies surrounding the transparency of Tether reserves, as we've spoken about on the show before. Is the supply of Tether something that can be used as an indicator of fresh fiat money that is entering the market? How have you viewed this?
So I would say I don't think that looking at Tether for pretty much anything is useful. I mean, I think the CEO of Kraken Exchange, might be an unbiased source, but in terms of looking at Tether and believing pretty much anything that comes out of them, I would be very, very wary of that. This is a company that is for a long time said that they were a stable coin and that they were backed 100% backed, and then suddenly they came out and said that they were fractional reserve currency, which they'd never said before. They never really apologized for the change, and everybody just went back to normal, like everything was hunky dory. And I think that that's not the correct way of looking at it. I know that U.S. regulators have subpoenaed Bitfinex, which is the exchange behind Tether. I really don't think that there's. I mean, of course, there might be some sort of correlation, but between Tether and Bitcoin, and when there's new Tether coming in, then of course some of that money ends up in Bitcoin. But that's only, I think, because people are trying to sort of hedge their bets when Bitcoin is volatile. They want to move it into a stable coin. For some reason, some of them are choosing Tether. TUSD seems like a much better bet to me, given that they haven't been mired in the type of controversy that Bitfinex and Tether have been mired in. So I don't think really you can believe anything coming out of Tether right now.
And Jose, what's your thoughts? Is there anything that you'd like to add to Jason's points there?
No, I think the point Jesse Powell was making about transparency, that as he describes it, the growth in Tether supply has been historically linked to an influx of fiat onto the exchange. I think that makes sense. He believes the most recent rally was driven by the retail market, but he also conceded that Tether is only a small part of the ecosystem. It's entirely possible that it's the other way around and we're confusing correlation with causation, and market manipulation is actually driving retail growth, which is in turn driving growth in Tether. So, I totally agree with what Jason said as well regarding Tether. It's always bizarre to me that Tether trades at $1 because, it's obvious that there's some default risk there and there's almost no chance of it going up in value. So it's bizarre to me that it continuously trades at $1, but, thus is the irrationality of sort of the crypto market.
Well, it's great to hear both of your opinions as well, and we do really appreciate your thoughts. Thank you both so much for joining us on the live show today. As always, thank you.
Thank you very much.
Thank you. And it's now time for our last minute update. The total market capitalization has remained trending in the north of the $320 billion mark. Trading activity has slowed down slightly, and the CoinMarketCap website's daily traded volume slipped below the $90 billion level. The price of Bitcoin has held the ground above the $11,000 mark on a double-digit surge. Well, that's all for this Wednesday's Crypto Now live show. We thank Jason and Jose for their expert analysis. I'd also like to thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.